Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and on the line with us today is returning guest Gwen Preston. Gwen is the publisher of Resource Maven, which can be found at resourcemaven.ca. Gwen, welcome back to the show.
Thanks for having me.
Yeah, and we had you on several months ago, back when you had started your service, and I'm happy to hear it's been a success for you. I want to talk to you about the macro trends that you're seeing in the market. Gold has obviously stayed low. It's maybe been forming a bottom basing pattern, and there's been some excitement the last couple weeks based around the Chinese and U.S. stock markets finally starting to crumble a bit while gold is holding up relative to those markets. Do you see any significance in what's going on with gold and, as an extension of that, the gold miners?
Absolutely. So, well, as someone who focuses on gold, I see significance in what gold does almost every day. But from a bigger picture perspective, what I have been saying for the last year has really been that for gold to start to truly shine, it would be ideal to see the U.S. markets top and turn down, and with that, if possible, the U.S. dollar at least flatline, maybe weaken some. Those two things being big pushbacks against interest returning to gold. If everybody's still making money in the U.S. markets, they're not going to put money in gold. They're feeling comfortable. They don't need a safe haven. They're certainly not going to put their money in gold miners with the track record that those miners have offered, the negative track records that they've offered. They're doing well in the safer big market. And of course, the U.S. dollar being strong pushes down against U.S. dollar priced gold. So for those two things to turn should create a bit of a rotation. Investors would start being nervous, wanting a safe haven, and looking for undervaluation. They're going to look around and be like, okay, wait a sec. I've been doing well here. Things seem to be overpriced in the major markets. I need something that's very undervalued. And a really obvious result of that search would be gold and gold miners. So there is absolutely significance in it, and I still am calling for the U.S. market to do poorly, not necessarily have some sort of dramatic turn down, but I believe that the bull market is over in the U.S., and I think that those markets are turning down. As for China, it's a little bit more, I'm a little bit less concerned about what's happening with the Chinese markets. I care more about what happens with the Chinese economy fundamentally. The Chinese markets rose so dramatically between 2014 and mid-2014 and mid-2015 that we're still really in a correction from that. And so it is headline-grabbing excitement for these 7% drops to, trigger trading halts and things like that. But the U.S. market, in terms of, it's a volatile place for investors, but those crazy shocks aren't really that significant when it comes to the metals markets and what's going to happen going forward. What matters there is the strength of the Chinese economy, which of course is a long conversation in itself. My overall perspective there is that the Chinese economy is doing fine. Sure, it's, GDP growth maybe 4%, 5%, 6%. I don't know the exact number. It's difficult to know. But that is against a very large base, right? When we had 14% GDP growth in China 10, 12 years ago, the Chinese economy was much smaller. So 4, 5, 6% growth is still very significant in China. And it all depends what you focus on. So for example, China, one thing that I love to look at is uranium. China has 26 operating reactors right now, but it is building so many reactors. It's almost difficult to believe how many reactors it has. It has sort of, 20, another 25 under construction, and then the pipeline of planned and proposed totals 175. So when you look at a commodity like uranium, China is absolutely a boom to that commodity. So there's a lot going on. As for gold itself, I think gold, I'm certainly not alone in believing that gold has generally bottomed. I don't expect it to perform, really well in 2016. I do expect it to finish 2016 higher than it started, and a lot of that because of the U.S. market topping and turning down, the U.S. dollar perhaps trending down somewhat, and those things creating some anxiety around some need for investors to have a bit more of a safe haven, and they glance over at gold and see it being very cheap.
Yeah, well, Rick Rule always uses the mantra that the bear market is the author of a bull market, and as a sector becomes extremely undervalued, at some point new players come to the table. And we've certainly seen that in 2015 in a big way. You had Carl Icahn come out with his big investment into copper. There's been a lot more smart money talking about the precious metals. Even I heard from one of my listeners earlier this morning that Mark Hart is talking about investing in uranium now. You just mentioned that. And, we're starting to see all these things come together that could maybe spark the movement up. I want to ask you, Gwen, when you start to look at the miners and you try to decide, because there are so many out there, what is it that you're looking for to make a choice on where to put your money?
Right, yeah, good question. I mean, you look at the sector, and sure, it looks undervalued, but then what's your specific move? Absolutely. So I try and break mine down into time frames. So I have short-term trades, I have medium-term, and then I have long-term. And I actually see some really interesting opportunities in every single one of those, in each of those categories right now. So on the short-term trades in the mining sector right now are about taking advantage of the opportunities that do happen to be there. If you take the big picture, you step back and you're like, we don't know when things are going to move. I don't know if this is the bottom. Those things are true. And yes, so it's difficult. It can be a little bit difficult to make sort of big moves on long-term trends. But there's opportunities to make 20 to 30% upside in a short-term trade if you really follow things closely. So take sort of a news opportunity or an arbitrage opportunity. Sunridge Gold is a great example of that. This is a Canadian company that has a very high-grade gold and copper discovery in Eritrea in East Africa. They've been advancing it quite successfully through the bear market. But then a few months ago, they got a takeout offer from the Chinese. And the takeout offer would be cash that comes in, and Sunridge Gold would return that cash to shareholders as soon as they have it and fold up business. They're not even going to try to continue going forward. They just want to thank their shareholders for their support and shut up shop. The money coming in represents at least 35 cents a share that shareholders would get, potentially more depending on legal costs and exchange rates. And right now, the company is trading at 27 cents. So provided you can gain enough confidence in yourself that the deal is going to happen. Certainly Chinese deals have fallen apart before, so there is some reason for pause there. That's why the gap exists. But I have confidence that the deal will close for a bunch of reasons. So there you go. Go in and buy for 27 cents and walk away with 30 to 38 cents in 2 months, cash in hand. So there's really interesting opportunities like that if you pay close attention to the market. Then in the medium term, that's where you're looking for sort of the companies that are distinguishing themselves by being really ready to take advantage when the market even just starts to strengthen a little bit. So you're looking at companies, if you look in gold, companies that have assets that are almost ready to develop and that show very good economics at current metal prices. Now, that's not actually a very long list of companies. You've got Kaminak in that list. They just put out a very strong feasibility study. You've got Integra on that list. They're a little bit farther back, but they're working really hard, and their asset is almost completely permitted already, which is a major de-risking event. There's just not a lot of companies on that list. There's not a lot of assets that are almost ready to develop and have very good economics at current metal prices. So these are the companies that are going to outperform in and of themselves as the market starts to strengthen. And they stand good chances of being taken out before that even happens, because the majors also look around and say, okay, this is the bottom. We should spend at least a little bit of our cash restocking our now almost empty project development pipeline at good prices. So there's quite a few in that list. It also includes things like some Canadian miners who are operating, who have their sort of their costs in cheap Canadian dollars, and then who get to sell their gold that they're producing in strong U.S. dollars. So they're making an incredible, they're making really good extra 25% just from the foreign exchange. So there's really interesting opportunities like that bode very well in the medium term. And then the long term, there's not as much rush to move into your long-term holds, but this is the group where you look around and you see, for example, earlier stage explorers or project generators, companies that have very interesting portfolios of projects, but they're earlier stage, and the market is not interested in early stage assets at the beginning of a recovery. That interest happens a little bit later. So those companies will do well, sort of in the heart of the recovery. They will do incredibly well. And now, in general, is the time to get in, but you just want to take your time and really pick the cream of the crop there. So, yeah, I find it a really exciting time, actually. Certainly, there's a lot of us who have been sitting around waiting for this bottom, this endless bottom to end for some time. And so I can understand that there's some fatigue happening, a lot of investors really hoping that, okay, let's get the bottom over with, let's start moving up. But if you can focus on there also being some near-term opportunities, some short-term trades that'll put 20-30% in your account in short periods of time, that's a really good way to keep your interest going while you sift through those medium and long-term opportunities as well.
And the other thing about this market, Gwen, is that there seems to be something for almost any appetite. I mean, your portfolio seems a bit more focused on the higher grade, really strong quality assets that will survive in a lower gold price environment. But even if you're in the camp where you like to look at optionality plays and you strongly believe in $1,800 or $2,000 gold in the next couple of years, there's a lot of massive size assets as a result of the 2000 to 2007 bull market that are simply not financeable in this market, but at $2,000 gold they could be. Do you have any interest in those type of deposits?
Absolutely. So I'd say there's those type of deposits, and similarly there's companies that are doing the project bank model, where they're going around and looking for assets of a range of sizes, big ones like you're talking about, or even the medium-sized ones that are available for incredibly low prices. So yeah, absolutely. There's the opportunity out there. The hard part is almost narrowing your focus. So if you're interested in everything out there, it will be very difficult to make decisions, because any company that has survived this 5-year bear market at this point has some good people, has some smart people taking advantage of opportunity. So pretty much all of them are doing interesting things. And it's a matter of what your particular preference is, whether you like the land bank model, whether you like let's hold on to a big project that when the market is really strong again is going to make major waves. Do you want something that's economic at the beginning of the recovery? Do you want something that's a play on a more specific commodity like uranium that you think is going to outperform earlier? You kind of have to pick your target. Otherwise, there's sort of almost too much opportunity.
Well, last week we put out a piece on uranium with Cecil Musgrave, and it's gotten high acclaims. It's a very popular interview so far. We talked about a lot of the uranium companies that exist out there, and there really aren't too many left. It's a far more narrow field than gold, silver, copper. Do you have any favorite picks in the uranium space, and how are you planning to deploy your capital there?
Sure. So I'd say my top pick actually for 2016, I had a short list of top picks that I put out, and one of them was Next Gen Energy. So that's the explorer in the southwest corner of the Athabasca Basin that has the Arrow discovery. This is an incredibly high-grade discovery that is in the basement rocks of the Athabasca. So the Athabasca is like a big bathtub that's full of sandstone, and then underneath this sandstone, there's this much harder crystalline rock. A lot of the high-grade uranium discoveries that the Athabasca is famous for come from that border between the sandstones and the harder rocks, which we call the unconformity. But you can also find uranium exclusively in the basement rocks, and that's much easier to mine because sandstone is very crumbly stuff, so it's pretty difficult to get in there and mine it, whereas the basement rocks you could actually build an underground mine a lot more easily and therefore cheaply. So NextGen has discovered really high-grade uranium in some very closely spaced continuous zones at this Arrow project. And one of the interesting things about NextGen is that it's still at a very early stage. So they haven't even put out an initial resource yet. That's coming in the next few months. And it's going to be pretty impressive. I mean, estimates sort of average 120 million pounds of uranium at an average grade, perhaps 1.5%, maybe 2% U3O8. That's a really impressive uranium resource to put out initially. So we'll see what the details actually look like, but NextGen is, they have $38 million in the bank. They've got big plans for this year. I think they're really exciting. They're the most exciting exploration story in uranium, in my opinion. And then on the production front, I really like companies that have the option to ramp up production quickly and easily once the price starts to strengthen. Because I do see some near-term, I think the uranium price is going to turn in the near term for all the reasons the complicated reasons that are supply and demand in uranium and how those interact with nuclear utilities and the contracts that they sign and how long those contracts are. If you add that all up, it basically points to uranium doing well probably this year, starting to do well this year. So I want companies that can take advantage of that right away. So Uranium Energy Corp is one of those. So they have a permitted operable mill in Texas, and they have a suite of in situ leach projects that surround that mill. And basically, as soon as the economics work, the economics work now, but as soon as the economics strengthen, they can just turn on production and start making uranium and selling it into that stronger price environment. So I really like that. And I also see no harm in getting a bit of exposure to a major like Cameco, and to, if you just like the uranium price, Uranium Participation is a company that just owns uranium. So they're just getting pretty much direct exposure to the price of uranium. So I think that those four would represent a good suite of exposure to what I see as some good upside in uranium.
I'm happy that you mentioned NextGen because in our uranium discussion last week, we failed to mention that and had a couple distraught listeners wondering why we didn't talk about them. So thank you for the update on NextGen. Gwen, I just want to finish up here, ask you if you have any predictions or suggestions to offer for 2016 or any final comments?
Absolutely. So I've mentioned uranium. I really am excited about uranium in 2016 as something when you look out in the spectrum of mined commodities, the one that has the strongest fundamental arguments right now is uranium. Gold is somewhat emotional, is somewhat geopolitical, and it has a million influences on it, so it's difficult to be really certain about gold. But uranium I can be a lot more certain about. So I really like uranium. I really like NextGen. I'm excited about some of these short-term opportunities because I really like being able to show my subscribers that regardless of the bear market, there is still money to be made in mining. And let's be honest, that's why we do this, right? We follow mining because we can make money at it. So I love that opportunity is there. I also expect to see some takeouts in the gold space probably through the year. And those are going to be the cream of the crop explorers and developers that will get taken out by majors who, as I mentioned, have very depleted project pipelines. So in general, I'm excited about the year, even if I don't expect it in itself to be dramatic and exciting. One thing that I would mention is that if any of your listeners are going to be in Vancouver in 2 weeks or on January 23rd, I'm putting on a conference alongside Eric Coffin and Brent Cook. So we are inviting our top pick companies, our favorite companies that we follow in our newsletters, to present at this one-day conference. They're going to do short presentations. Each of us is going to do short presentations. And then there's going to be a lot of just coffee and lunch break time when everyone can chat with each other, corporate, but let's catch up with what's going on with our favorite companies and what we think is going to go on in the market this year. It's called the Metals Investor Forum. And if anybody's interested in attending, you can pick up some tickets at the website, which is metalsinvestorforum.com. I think it's going to be a really exciting day.
Okay, great. So metalsinvestorforum.com. Gwen's primary site is resourcemaven.ca, where you can sign up for her free and paid newsletter. Gwen, thank you so much for coming back on the show.
Thank you so much for having me. It's been great.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?